In recent years, the global economy has been shaped by a series of controversial and consequential decisions. Among them, the trade wars and tariffs instituted during Donald Trump's presidency. As the 45th President of the United States, Trump initiated a transformation in how America engaged economically with the world, particularly with China. Today, we unravel these economic policies to understand their impact and motivations. At the core of Trump's economic agenda was the assertion of American sovereignty in global trade, perceived to have been compromised by existing agreements. The administration believed that previous trade deals resulted in the loss of American manufacturing jobs and allowed other nations, most prominently China, to benefit disproportionately at the expense of the U.S. workforce. Thus, in 2018, Trump embarked on a series of tariffs, starting with steel and aluminum, citing national security as a primary concern. The tariffs were structured as taxes on imports from countries deemed to have unfair trading practices. The spotlight soon shifted overwhelmingly to China, America's largest trading partner. Tariffs were imposed on hundreds of billions of dollars worth of Chinese goods. The intent was clear: to pressure China into renegotiating trade terms, protect intellectual property, and reduce the trade deficit. The trade war with China escalated quickly. China retaliated with tariffs on American products, notably targeting the agricultural sector, a critical constituency for Trump. This tit-for-tat exchange strained relations and affected global markets, eliciting mixed reactions from economists, businesses, and international allies. Some argued that these moves were necessary to level the playing field, while others warned of long-term economic disruptions and increased costs for consumers. Amid these tensions, the Trump administration pursued bilateral negotiations, seeking to broker deals perceived as more favorable to American interests. Perhaps the most significant outcome was the Phase 1 trade agreement signed in January 2020. This deal promised increased Chinese purchases of American goods and addressed some concerns over intellectual property protections. However, critics questioned its efficacy, noting that many issues remained unresolved and commitments were often half-hearted or vague. Domestically, the tariff strategy was met with varying outcomes. While some industries, particularly steel, saw a short-term boost, others struggled under increased costs for components and retaliatory measures that restricted access to international markets. Consumer prices for certain goods, like electronics and clothing, grew noticeably. Moreover, the agricultural sector suffered from reduced exports, prompting government subsidies to mitigate the impact on farmers. In conclusion, the trade wars and tariffs under Trump's administration were emblematic of a broader shift towards protectionism and a recalibration of global trade dynamics. While they intended to safeguard American jobs and industries, the broader economic impact remains a subject of debate. As we continue to navigate the complexities of global trade, these policies serve as a reminder of the delicate balance between national interests and international cooperation. The legacy of Trump's economic policies continues to influence discussions on trade, sovereignty, and economic strategy in a rapidly evolving world economy. Subscribe to Politics RB